This chart shows you the volumes of crude oil and LNG that have flowed via the Strait of Hormuz from Gulf nations in the last 14 months. And concerning crude oil, you do obviously have Saudi Arabia with 2.4 billion barrels, you do have Iraq, you do have the UAE, and Kuwait, Qatar, Iran, and Bahrain. And so you do see those Gulf nations obviously supply a lot of crude oil, but you do not really see the United States or Europe being really dependent on that. You do see primarily China and the rest of Asia importing those crude oil supplies. Now, we have seen those supply disruptions being reflected by crude oil prices anyway. And so we have now actually recently swept this high from September 2023. We've seen prices going up to up to 120 barrels. But this recent high is actually acting as support now. We're currently seeing this phase of consolidation in this volume area right now. But whether we're actually about to see this continue here to the upside concerning this latest price surge that we've seen happening here to crude oil, we can only discuss that and answer that question by taking a look at the past cycles, because they are actually showing you that history is always repeating itself. And so what you can actually see here on the chart, on the weekly chart of crude oil from the New York Mercantile Exchange, is that you do have divergences between crude oil prices and the gold to oil ratio. Now, obviously, that makes a lot of sense. When this ratio is falling, that means that oil prices are rising. Now, whenever we've seen that happening, that obviously when oil prices actually have risen against the gold prices, that historically actually signaled the last few crashes. We've seen that this divergence actually appeared before the dot-com bubble crash. It appeared before the great financial crisis. It appeared before this sell-off happening here in 2013 and 2014. It happened before this sell-off happened in 2018. It happened before the sell-off happened in 2022. And it is happening once again. And so we argue at Chronos that history is currently repeating itself once again. We are seeing that oil prices are actually surging against the gold prices, and so this ratio obviously is currently falling off a cliff. And coinciding with that, we are seeing this price surge happening here to crude oil. Now, we are also seeing that the stochastic RSI is surging to the upside to levels that we've recently seen back in history crude oil topped out at. Now, we're currently reaching those overbought levels. We're currently seeing those supply disruptions, and we're seeing massive price surges happening here to crude oil prices. But in addition to that, we'd like to take a look at the copper to gold ratio and the gold to S&P ratio, because this is also showing you a quite interesting correlation. Historically, we've assessed this data for quite some time now, but it's really the fundamental basis of our analysis, because whenever we've seen historically that the copper to gold ratio has been falling, in other words, when we've seen gold prices outperform the prices of copper, that historically marked the massive recessions here, for example, with the dot-com crash, here with the great financial crisis in '08, and also here with the COVID crash. And so in the last few decades, we've seen a hit rate of almost 100% concerning those ratios, because coinciding to that, we've also always seen that the gold to S&P ratio started to increase significantly. Now, why is this happening? Well, we tend to see that equities are doing really, really bad in times of economic stress. We tend to see stock market crashes. That is exactly what happened with the dot-com bubble crash, and exactly also what happened here in the great financial crisis, and also with the COVID crash. And so gold starts to outperform the S&P 500. It also starts to outperform copper prices. And so whenever we've seen those divergences, the copper to gold ratio moving down and the gold to S&P ratio moving up, that actually signaled those last few recessions. And you might have guessed it, we're currently seeing it happen once again. This is really the power of those ratios. We're really seeing what is currently happening, and this cannot be misinterpreted. This is just pure empirical evidence that we are assessing here. And so if you appreciate this, don't hesitate to hit the like button, subscribe, and also don't hesitate to ask questions or give us your opinion down in the comments. Thanks for your support. Now let's continue. We've just assessed this data. We've just assessed the fact that we do see those divergences here happening with the copper to gold ratio and the gold to S&P ratio, and that signaled the last few recessions. In addition, we've assessed that this gold to oil ratio obviously tends to weaken as we are seeing those inflationary developments happening to gold before suddenly we tend to see gold top out and a sell-off, a crash is happening next. Now we do see those things happening in cycles, and we do tend to see that we are seeing those inflationary pressures. We are seeing the stochastic RSI top out, and then we are seeing that after we've seen those divergences with this ratio and oil prices, after we've seen the stochastic RSI go to the upside significantly, that actually signals crashes and sell-offs happening to oil. Now, we are not only seeing the stochastic RSI increase here significantly to those topping levels, we're also seeing this divergence now playing out. And so in our eyes at Chronos, we believe the time has started to tick. We're seeing that this might end in the next few months. Now, historically, we've seen that those inflationary pressures can actually take some time until they are basically ended, either by the war being ended or by a deeper deflationary power. For example, we could see a crash happening to equities. That would lead to obviously profit margins shrinking. That would lead to layoffs. That would lead to a deflationary debt spiral, where we do see the debt actually being destroyed, where we are seeing a deleveraging of the financial markets, and we are seeing less demand for those energy prices, for those energy assets, and eventually that will obviously lead to a deflationary crash, as we've seen it, for example, happening here in 2008. Now, we are having this inflationary pressure currently outweighing this risk of seeing a deflationary crash, but we at Chronos argue that this is just a matter of time. We believe that history is about to repeat itself, and whenever we've seen this gold to oil ratio fall, especially fall in this significance, that ultimately it was just really a matter of time. We've seen it reverse and lead to this spike where we've actually seen that oil and gold prices have been falling, but we've actually seen oil prices have fallen more significant, as we're seeing obviously gold being also this safe haven asset. Now, in the short term, we believe at Chronos there seems to be still a lot of upside potential. We have actually seen a higher highs form out now in the last few days. We are now actually seeing this top here back of this rally in September 2023 acting as support now, as we're currently actually consolidating in this high volume area. And so this could actually be the perfect setup for a continued upwards trend here at crude oil. Coinciding to that, we've actually seen that cumulative volume delta has also recovered. It is turning positive again. And so there certainly seems to be a lot of upside potential left, also because of the fact that we do not really see any kind of signs of peace on the horizon. And so we certainly are remaining quite open concerning bullish rallies continuing here at crude oil. Now, in the long run, as we've just discussed, we believe that it's just a matter of time until we do see oil prices coming down significantly once again, especially as we're seeing those developments here at the stochastic RSI. We've historically seen some consolidation on those high levels, as we've seen oil prices slowly move higher. But then ultimately we've seen big deflationary crashes, and one of those might actually repeat again in 2026. So if you don't want to miss those important information in the future, don't hesitate to hit the like button, subscribe, and also don't hesitate to ask questions or give us your opinion down in the comments. Thanks for your support. See you the next time. Bye bye.